Hello and welcome to the Collective Shift channel. Matt here to share with you the latest news from the macro space and crypto industry over the past week. We've had some heavy selling in the past 5 to 7 days or so in the crypto asset market, so getting to that towards the end of this episode, as well as I'll be providing my thoughts and opinions on where the market is heading next as we head into the final month and a half of 2021. As always, we'll start with news about the Australian economy and zooming out then further to the whole global macro space. So biggest news from the past week in the Australian economy was the wage figures coming in this week for the quarter ending September 30. So wages figures also always are so crucial to one of the biggest pieces of macroeconomic data that comes out because it really does just have so many connotations and really drives the narrative of what is happening. And it's really keeping a health check really on the state of an economy. So with respect to Australia, the September quarter saw an increase of 0.6% of the average wages in Australia, and 2.2% for if you annualize that, adjusting for seasonality. So that is still, for the wage index has been live now for a bit over 20 years. So that 2.2% is still towards the lower end. So still historically low wage growth in Australia, I guess is what I'm trying to say. And from the RBA's perspective, or the Central Bank, Reserve Bank of Australia, they would like that 2.2% to be more towards, or more to 3% or even higher as well. Before they would, once it gets above 3% growth, they would then be more comfortable with inflation actually being able to stay around that 2.5% level, which is where the RBA kind of really is like the best kind of area for inflation in any kind of developed economy. Not too low, but not too high. So got the RBA governor here, Philip Lowe, saying that he would expect wage growth to surpass 3% in the next couple of years. He certainly doesn't expect it to happen anytime soon. So really, in real terms, you'll often see real terms discussed in economic news and business news. You're still seeing Australians actually, their purchasing power decreasing year on year. That's because the inflation rate is higher than the growth in wages. So whilst you might think a 2% bump up in your salary is you might be happy about that. If the inflation rate in the economy is 4 or 5%, that is actually, a lot of people don't realize that their purchasing power, or, how far their dollar goes, to put it another way, is actually diminishing. So always important to view wage figures in association with the latest data on inflation. Speaking of inflation, just after my latest weekly update, my previous one, the inflation figures came out in the US, and yeah, wow, it was incredibly high. It was 6.2% over a 12-month period. So, which was the highest that the US has seen since December 1990. Core inflation was increasing by 4.6%. So core inflation just strips out, the likes of food and energy. That increased by 4.6%, which was the fastest gain since August 1991. So energy was really the real surge in energy prices, as I've been covering in several recent weekly episodes. That has really been driving up inflation all around the world, including in the US. So again, that's kind of negating any increases in wages. Again, just really that purchase. It's all about the purchasing power of the average citizen. That's what you really have to pay attention to when you're focusing on inflation or wage growth. Really, I'm expecting to see inflation just dominate the headlines for the next several months, and we'll continue to see that fight between one side of the argument is really pushing the idea that inflation is just going to be here temporarily as an effect of COVID, really. So just all the economy is getting back up to gear. That's causing a lot of stresses in certain industries and causing prices to rise. But the thought there is that everything will settle down and prices will come back down and inflation will come back down, rather. Versus the other side of the argument, which is, hey, these price rises are not temporary, and they're not. That yes, they might be caused a bit by the COVID pandemic. However, there's other factors at play that are driving up prices as well. So expect that battle or that debate to be playing out over the next several months. That's what I'm expecting, at least. And just got some figures out here in the US as well, which was significant. Retail sales for the month of October rose by 1.7%, which I believe was higher than what the analysts were expecting. So as we can see here, retail sales, which are a measure of how much consumers spent on goods ranging across categories such as automotives, sporting goods, and food and gas, increased 1.7% in October, which was compared to 0.8% in September. And when you exclude autos, sales also increased by 1.7% as well. So both of those two figures of 1.7% were above the consensus forecast. So again, just signs that the US economy is, their economic rebound is going very strongly indeed. Over in Europe, and a bunch of European stock markets have been hitting all-time highs in the past 7 days. I know just last night, the French stock market and the German stock market, or their main indices, which is basically seen as a proxy of the whole stock market, a bit like the ASX here in Australia. Both of those hit all-time highs, as well as the Pan-European Stock 600. So again, just it's more, why is this happening? As I've been covering in recent weeks, it's mainly a result of the stronger than expected corporate earnings season for the third quarter. Similarly to what we've been seeing in the US, there's been a lot of European companies that have been reporting very healthy figures that have either been in line with the analyst expectations or even better than analyst expectations. So basically validating their valuations and really not giving investors any reason to sell the stocks. So if that happens for the majority of the stock market, then you're going to see prices continue to rise, which is what we've been seeing. And also another key reason why European stock markets have been rising at record highs has been just signs that there's an easing of tension between the US and China. That was basically off of meetings with President Biden and President Xi, which have, again, there's been a kind of a drawn out period of the US and China not really, their relations have been quite tense for the past several years. However, it really that tension escalated really earlier this year, I think it was, with tariffs and kind of a halting of their trade talks. So yeah, it's great to see that the two leaders are now at least engaging in dialogue, and that was interpreted favorably by the market. Moving on to probably a hybrid of crypto and macro. So best place to talk about it was that infrastructure bill, that was worth over $1 trillion US, did get signed by President Biden. So that essentially ratifies the bill, or makes it law essentially. So the final step of that bill has now been completed. So that's just a huge benefit for the US economy in general, and will just like really ignite just a bunch of stimulus, really, in many ways, fiscal stimulus at least, to several industries such as construction, and manufacturing, things like that. And on the crypto side of things, we did see that provision to do with the crypto tax reporting, that did still make its way into the bill, and it did not get changed. So we saw a lot of discussion and attempts to change that language of crypto companies having to report a bunch of a bunch of data to the IRS or the Internal Revenue Service. However, that was unsuccessful in getting changed. So as far as my understanding is, there is still chances that this will get changed, this language, to not make it so harsh on crypto companies operating in the US. And then in addition to that, there's also the chance that the IRS actually doesn't act upon that language and doesn't interpret it so strictly by the letter of the law, so to speak. There's a chance that they don't do that, and they actually just kind of collect data and collect information that is practical and within reason. So in many cases, you're seeing these crypto companies being very worried at the moment that they won't actually be able to, it's actually going to be impossible for them to collect the data on their customers, which is what the language in this bill is talking about. So yeah, very tense times for US crypto industry participants. But yeah, there are attempts at least to fix this, such as I just spoke about. And another example of that was actually senators introducing bills to amend some of that language. So just yesterday, two senators in the US have plans to introduce a new bill today that would reverse some of the cryptocurrency provisions in the recently passed bipartisan infrastructure package. So I got the block here reporting that they have obtained a copy of a yet to be introduced legislation, and the draft says that it seeks to revise the rules of construction applicable to information reporting requirements imposed on brokers with respect to digital assets and for other purposes. So basically, it would exclude individuals developing blockchain technology from having to report information about their users to government agencies. So expect a lot more headlines and news about this sort of how this is going to play out over the months ahead. Worst case scenario, I actually don't think that this requirement, it isn't going to be mandated for quite some time, if from what I read is correct. So it's not going to be an immediately bearish scenario, even for the market, I'm saying, even if kind of it does go ahead without any amendments. Okay, this was super exciting news last week. In my opinion, this was the most bullish news of the week. What am I talking about? Paradigm. So a really big crypto venture firm in the space, venture capital firm. They unveiled a new crypto fund worth 2.5 billion. Yes, 2.5 billion with a B. A fund worth 2.5 billion. Just incredible. And the amount of money that you just would not have thought possible even 2 years ago, looking at this space, to see just one entity raising a fund worth 2.5 billion. You really have to step back sometimes and look at how far this industry has come and how fast it is growing. Why do I interpret this as the most bullish news of the week? It really just gives it really helps innovation, really. It's going to Paradigm now have to deploy this $2.5 billion that they've raised from, LPs or limited partners, as they're called. And so they're going to have to invest in a bunch of startups and a bunch of, maturing crypto companies rather. And those companies will essentially be able to hire the best talent from, other industries as well as from within the crypto industry. And it will really just fuel, research and development efforts as well. So this was actually the biggest ever crypto fund raised in the entire industry. So just massive news. It just pipped A16Z's crypto fund, which was worth 2.2 billion earlier this year when they announced it was their third crypto fund from memory. So just between A16Z's third crypto fund and Paradigm's, I think it might be their second fund, that's almost $5 billion worth of capital to be invested in the crypto space, whether it's in the NFT category, Web3 or DeFi, or even just base layer blockchain kind of solutions or scalability solutions, and even the picks and shovels kind of companies such as tax software or wallet providers or crypto exchange operators, or even blockchain analytics startups, compliance startups. Like there's so many opportunities, and it's just to see like such the ecosystem at the moment after all these years kind of being in the industry. It's like I've never been more excited when I see news like this, just because I know how hectic this next 6 to 12 months is going to be with new projects being announced, and also startups and projects that we're excited about at Collective Shift. It's a really big opportunity for these projects to get recognized and get access to capital to kind of accelerate their growth and to blossom into, in the ideal scenario, a protocol that gets a lot of activity and usage, and also then the token attached to that protocol actually appreciates heavily in value, which is what we basically focus on researching here at Collective Shift, finding those tokens that have the best chance of accruing value mostly in the medium to long term. But yeah, super exciting, and I wanted to highlight that. Okay, the Bitcoin protocol had a massive upgrade a few days ago. So the Taproot upgrade it's been in the works for about 3 years, I think, 3 years or so, and it's Bitcoin's biggest upgrade for several years now, and it finally got pushed, went live to mainnet on November 14. So the lowdown here of what this is going to, what Taproot kind of, how does it even improve Bitcoin, or why is it even being launched altogether. It really will just help the Bitcoin protocol be a bit cheaper, ideally, if a lot of industry participants actually adopt it. It'll make Bitcoin transactions a bit cheaper, and will also bring a bunch of privacy features. It will essentially help Bitcoin transactions be more private than what they are today. And just another benefit was also, it would just add a bit more smart contract functionality to Bitcoin. Definitely nowhere near as rich as what the functionality is on other blockchains such as Ethereum and Solana and Polkadot and the like, but definitely it's an improvement on Bitcoin smart contracts functionality to date. And I just want to highlight also that Cash App. So that's the really popular app that I think it's only available in the US, but that's owned by Square, which is a huge payments company, and recently is now the parent company of Afterpay, a huge buy now pay later company in Australia. So the Cash App actually announced today that they are going to add support for Bitcoin Taproot by December. So one of the first companies to actually announce that support for Bitcoin Taproot, which requires a lot of upfront work which will require a lot of work by their internal developers to get that infrastructure right. So to see that announcement actually coming from such a huge non-crypto native company, such as such as Square and their Cash App was such a real exciting announcement today. All right, I want to get into some NFT news, and it's kind of been interesting to see this, heavy market sell-off that we've seen, which I'll get to soon. It's kind of been interesting to see NFTs or non-fungible tokens seeing, the trading activity and also the average price of NFTs, how that's been going in this most recent market period, essentially. So what we've been seeing is like trading volume on the biggest NFT marketplaces really taking a hit over the past 2 months or so. But the average price of of a single NFT is at the highest it's ever been, which really the reason for that is essentially just more high profile purchases or more big purchases of the more high profile NFTs such as CryptoPunks and Bored Apes or Bored Ape Yacht Club. So that's what we're seeing here on screen here from Decrypt. Bored Ape Yacht Club, floor prices have just exploded. So for those of you unaware, Bored Ape Yacht Club, it started off as a profile picture kind of NFT, but actually now has heaps of other has a real flourishing ecosystem and a lot of other benefits that Bored Ape Yacht Club holders get access to as well, such as like in real life events and access to other exclusive benefits such as community, more related to community and social. But yeah, we've seen like a bunch of celebrities really and high profile figures purchasing Bored Apes in the past few months really. I think NBA superstar Stephen Curry was one of them. I think he still has it as his profile picture. Steve Aoki, so really popular DJ, 8.2 million Twitter followers. He bought 4 Ape Yacht Clubs. He brought 4 Bored Apes rather, when they were worth an average of 6 ETH each. They are now worth about 45 ETH each. And he actually purchased another one today at that price of 45 ETH. So he still thinks it's barely scratching the surface. And it's again, I've said it before, DeFi, for all the hype that DeFi got last year, compared to NFTs, it did not bring in anywhere near as many, external people in just the average public who have never had any exposure to crypto. DeFi didn't really bring in too many of them, but for NFTs, they most definitely have brought in the most amount of attention and I guess just awareness of crypto that I've seen to date. Arguably meme coins such as Dogecoin have been another, I guess like gateway drug for lack of a better term. But NFTs definitely do that in a more, I guess, sustainable and exciting way than something like a meme coin. So just going through some others here, some other high profile names. I think Stephen Curry, he still has his profile picture, 15.6 million Twitter followers. And then we did see Post Malone, so, super popular, I guess, like singer. He featured Bored Apes in his most recent music video with, I think it was The Weeknd. Quite cheesy in many ways, but again, just more awareness kind of Bored Apes. And he purchased two Bored Apes just recently. So again, this is all through Twitter essentially. Like you're seeing seeing his profile pic now as a Bored Ape as well. So 6.9 million Twitter followers. And just from all different walks of life, whether it's sport or music or acting, or even art, you're seeing everyone kind of getting involved in purchasing NFTs. Another big one last week was Jimmy Fallon, the host of The Tonight Show. He also purchased an NFT, so just the list goes on and on and on. Is it too late to buy an NFT? To buy a Bored Ape? It really just depends on how much you have to spend. Right now, they're about, 45 ETH. So, that's, if you're talking about, 4,000, a price of 4,000 ETH, that's, getting up towards $200,000 US for one of these Bored Apes. So definitely not, accessible to the average day, or to the vast majority of the planet, really. But you are seeing a lot of a rise in a bunch of like fractional NFTs. So to let you, I guess, get exposure to Bored Apes by purchasing a fraction of one, that's something that I expect to continue into next year. But yeah, there's so many other opportunities in the NFT space as well. So if you don't have enough capital to put into one of these high profile ones, that's something that we try to basically work on every single day, finding those kind of opportunities for our members primarily, whether it's through our monthly NFT report or our daily project discovery report, where Nathan, and 3 days a week I'll help him as well. We'll go through and find what we think are the best NFTs and the best new projects in the broader crypto industry. But I did just want to give a shout out to Nathan for buying a Bored Ape and telling members about his experience buying a Bored Ape back in May. So the floor price there was I think his budget back then was 0.75 ETH. So I'm not sure how much he purchased his first Bored Ape for, but it would have been less than 0.75. And now for that to be worth 40 ETH or 45 ETH, and I know several of our members did actually kind of get in on Bored Apes as well very early. Unfortunately, I didn't, but that's a very tidy, what's that, 60x, 60, 70x, depending on when you purchase your first Bored Ape. So yeah, kind of just what we're trying to do here at Collective Shift. Like, there's so much noise out there in all the NFT space in particular. So just getting more resources into just really trying to stay at the cutting edge and, identify the next trends happening. And I just did want to, if it wasn't as clear as the impact of NFTs on crypto, just to emphasize it, I wanted to just highlight this Google Trends graph to you all. So for those of you watching listening to the podcast rather, you won't be able to see this, but what I am displaying on my screen is Google searches of NFTs has actually surpassed Google searches of Ethereum in at least in Australia. That's happened for the very first time just in the past week. And I'm just going to move it here to global searches over the past 12 months. And yeah, that has just happened in November as well for the very first time. So just another sign. If I type in DeFi here, if I replace Ethereum with DeFi, again, you can just see how much, just significantly how much that gap is now between NFTs and DeFi. Really just emphasizes my earlier point of how much attention NFTs are getting relative to DeFi in the broader public. And yeah, in addition to that, just quickly, the actual searches of NFTs themselves are at record highs. So not just relative to other keywords in the crypto space, but also, search queries of NFTs themselves are at record highs. And just as we're closing up in our NFT coverage here, or my NFT coverage, I did just want to point out just a bit of a resurgence in NFT, enthusiasm and activity in the NFT space. So OpenSea, which is the largest NFT exchange in the world, we can safely use them as a proxy for the broader NFT sector and how much interest and activity is going on there. And just looking here on the daily volumes charts, we can just see an explosion in the last 4 to 5 days of the amount of the dollar value of the amount of transactions going on OpenSea. So really, compared to, we had probably October 25 to, we probably had a 3-week period from October 25 to November 12 of basically, about 50 million in daily volume, and you've actually seen that double in the past 4 days. So every day has topped 100. Yeah, every day has topped 100 million in US dollar denominated terms. So we haven't seen that. We haven't seen that consecutive activity since 4 days in a row. We haven't seen that since early October. So I did just want to note that too. And it's actually even more notable because we're actually in the midst of a sell-off in the crypto asset market. So definitely worth noting there. But as I noted earlier, it's also happening at a time when the average prices of an NFT is the highest it's ever been. So it's easy to actually kind of mistaken this to be a rush back in of the masses into the NFT space, but that isn't what we're seeing. We're actually just seeing a lot of whale transactions, or a lot of, I guess, whales or high net worth individuals, making plays and purchasing NFTs that have depreciated heavily in the later stages of October and early November. But nonetheless, I did just want to point that out to you all. And what are my thoughts on the NFT market moving in the rest of 2021? I still think there's going to be like another leg higher. I just think there's a string of really bullish news coming up for NFTs. Most notably the launch of Coinbase NFT, which is happening. I'm not sure if there's a date for that, but it's happening very soon. That will be by far the biggest one, in my opinion, that just really acts as a catalyst for more interest and participation in the NFT ecosystem. On the counter of that, despite all those bullish comments, I did just want to highlight a story I saw just before I went live to record this, that legal ramifications of launching NFTs and how that has to do with intellectual property rights or IP rights. So we saw Quentin Tarantino, very famous movie director. He announced, I think it was last week, that he was going to launch an NFT series. I think it was on the Secret Network blockchain. Those NFTs were going to be associated with the movie Pulp Fiction, and we're going to offer things such as like never before seen extras and scripts that have never before been seen. And just a few days later, we've seen Miramax, which is the production company and the owner of I guess all of the IP associated with Pulp Fiction. They've come out and actually filed a lawsuit against Quentin Tarantino. Filed a lawsuit accusing him of copyright infringement by selling NFTs that are based on the Pulp Fiction movie. So I did just want to highlight this because you can see Miramax here are basically trying to, get ahead, really squash this early, because you can see how this could really, if Tarantino was to have success in launching this NFT, and if Miramax, for example, did nothing, you could definitely see a scenario where it would spur a lot more of this kind of stuff where, people are perhaps using Miramax's IP and other types of production companies who, I suppose, from a legal standpoint, actually are the owners of this IP, I assume. So it's a really interesting time to see this kind of teething issues, I guess, in the NFT space really be actioned and brought before, in this case, brought before either the court or whether it will be a settlement outside of the courts. I will be watching with interest to see what happens with this lawsuit, because it'll really set a precedent and for, I guess, future direction of what kind of solutions and what kind of collections and what kind of media you can actually release as an NFT if you are, I suppose, not the entity that actually owns it. So in this case, Tarantino or Miramax here is alleging that Tarantino isn't the owner of all this stuff to do with Pulp Fiction. I haven't looked too much into it, but from my initial kind of thoughts, you would think that is actually a sound argument. But nonetheless, we'll see what happens here. You're kind of, just before I wrap this up, you're also seeing at the moment in the NFT space a huge tension between NFTs that are released into the public domain. So they're called like CC0 or like CC0. It's kind of like a standard of copyright that is very widely used in the creative space and like in the freelance industry, and the creatives will be a lot more familiar with these like standards. There's like CC0, I think there's CC1, CC2, CC3, I think CC4. They're all just different standards of, hey, if I release a piece of media under CC2, it will give you certain rights of how to use this type of media. So a bunch of NFT projects are releasing them as CC0, which is essentially just saying, hey, you can use this media or artwork in any way you wish. Go ahead. It'd be nice if you kind of attribute us with the rights of this, but you don't have to. We won't file any lawsuits against you if you go ahead and, take this NFT artwork and turn it into a cartoon series. We're not going to come after you later and sue you. That's what essentially happens when you announce that you're releasing something into the public domain. So I've seen personally a bunch of NFTs in recent weeks and months announce that they are now like listed, or they now are, I guess, released under CC0, so members of the public can use them however they want. But then on the other hand, the more popular NFTs such as CryptoPunks and all the other ones that are owned by the entity called Lava Labs. I think Meebits and Autoglyphs and CryptoPunks, those three are all owned by Lava Labs. So, myself, Matt, I can't go technically or legally, I can't go and create an animated movie, or I can't go out and, this coffee mug I have here, I can't go out and print a CryptoPunk on it and go ahead, and I can't go and sell that on Etsy or something as a line, as a product. Legally, I could actually be in some trouble because Lava Labs is actually the owner of the IP associated with CryptoPunks. And similarly, I think with Bored Apes, Yuga Labs or YUGA Labs, if I'm not mistaken, is the owner of the IP associated with Bored Apes. I have to read up on that one a bit more. But I just really wanted to, why am I talking so long about this? In 2022, I expect this to really get a lot more momentum, this idea or this kind of tension between how NFTs operate in the regulatory space, and kind of in particular, like IP lawyers are going to be making a killing in 2022, in my opinion, because you're going to have so many, edge cases where it's just unclear whether the release of a certain NFT is or is not a breach of, copyright infringement, for example, or, a misuse of IP. So, and then how does that relate to us as investors in the space? Well, if there is some really harsh or favorable law or case law, so some favorable judgments in the courts that are kind of in favor of the likes of Miramax in this example. That would kind of be, in my opinion, very bearish for the NFT market, because it would kind of just be a reminder that, hey, you can't just go and do whatever you want. And therefore that would kind of just, in my opinion, just put a bit more parameters on the NFT, I guess, the creativity scene in the NFT market. But that's just my opinion anyway. But I don't expect these kinds of stories to go away anytime soon. I'll just have a drink of water here. Okay, getting into the crypto markets, and yeah, we finally had a sell-off in the Bitcoin markets. It's been quite a while since we've seen such deep red candles. But it was inevitably going to come. Like, it was quite a historic run-up that we saw. So what we have seen is, Bitcoin hitting almost 70,000 on November 10th. And then from about 66,500 US dollars on November 15th, it's crashed all the way to as low as about 58,500. And at the time of recording, it's bounced back up a bit to 59,500. So on the daily time frame here, we can see it's kind of just Bitcoin's tussling with this 50-day moving average. And from the bulls' perspective, they would be hoping that Bitcoin can bounce off of this 50-day moving average and actually have that 50-day moving average provide some good support there. And yeah, Bitcoin is still healthily above the other two major moving averages, the 100 and 200 day. And the RSI is not really getting towards oversold territory just yet. That would be about under 30, and at the moment it's at 42. And just quickly recapping ETH, what's been going on with ETH. Similarly, heavy sell-off from about, almost about 4,900. And it sold off. It almost went under 4,000, but it's now rebounded a bit to 4,100 at the time of recording. And again, just bouncing off of that 50-day moving average on the daily time frame. So that's what has happened. What do I think is going to happen next? I'm definitely not a technical analyst by any means, but I can give my thoughts on what I think Bitcoin and ETH will do in the coming months. I still think that they are going to go up another leg higher and surpass the all-time highs that they just set last week. I definitely don't think this is the end of this current bull cycle or bull run that we're in. I just think that it's been, there was a lot of leverage had come back into the crypto markets, and part of this heavy sell-off in the past few days was a result of a lot of that leverage being wiped out, which is what we saw happen. I think it was in early September. I think it was then. There was another time recently where it was just a huge liquidation, essentially. It could have even been early May, when there was just levered traders getting overconfident and essentially just having a cascading of liquidations once they get really confident. It's healthy for the market to do that. Otherwise, things would just get really shaky and unsustainable. So that's now been flushed out, and the leverage, the open interest in the markets has kind of reset. So that's a plus for, I guess, for the bulls, and for a case of Bitcoin and ETH and the whole market going on another leg higher. But I just think fundamentally, why do I think that ETH and Bitcoin are going to surpass all-time highs, in my opinion, before the end of the year? Really, there's just so much bullish news coming up, and whether it's to do with like adoption of the traditional world, or the traditional financial world. From the retail side, like, we got Commonwealth Bank, Australia's biggest bank, is currently piloting their support of cryptocurrencies, purchasing and buying and selling them in the app itself. That's going to be rolled out in the coming weeks. In the US, you've got Fidelity, one of the largest asset managers in the world. They're launching their retail offering very soon. And then you've got the elusive Bitcoin ETF, or at least a spot-based ETF. That's, it did get declined again last week, so I don't expect it to be approved. I wouldn't expect it to be approved this year, but it's still always a potential catalyst when that does come, perhaps sometime in 2022. But yeah, I wouldn't expect it before this year. What's another potential catalyst? I think Tesla is another huge dark horse here. They did say, when they removed their support for Bitcoin earlier this year, they did say that, or Elon Musk at least did say that he would be open to, re-engaging support for Bitcoin, for payments and things like that, if Bitcoin's composition of mining was to become a lot more greener, which it definitely has this year. Just the amount of innovation going on in the Bitcoin mining space for leveraging renewable energy and otherwise wasted energy in some cases, particularly like the gas flaring and things like that. That's come a long way this year, and I think people are kind of sleeping on that one a bit, in terms of Tesla actually coming out and going, oh wait, now we're actually satisfied with Bitcoin and we are going to accept it again. I think that news would just be like super eye-opening for the public, to be like, oh wait, how come now they've changed their mind? And then people would dig into it a bit deeper. From the NFT side of things, just like so many like bullish things again coming up. I think like TikTok are just getting started with their NFT solutions that are deployed on Immutable X, which is a scaling solution built on Ethereum. They just had their first NFTs in the past month. Coinbase NFT, as I said earlier, is on the verge of being launched. And just a reminder, like, I think people also forget how impactful Coinbase is for the whole industry. It was ranked #1 financial app in the entire US just last month in the Apple Store. So they're launching the NFT soon. Twitter is announcing it's working on an NFT integration, so that will be, I don't think that'll come out before the end of the year, but that will be coming out sometime next year. So just more awareness and I guess, more awareness of NFTs in general. And then on the Ethereum side of things, you've got all these scalability solutions going live before the end of the year, to be honest. Like, the total value locked in layer 2 solutions are currently the highest it's ever been, at over, $5.4 billion US. If we also is at all-time highs in terms of the amount of ETH locked up in scalability solutions. So yeah, that's got me super excited about, I guess, just reasons why I don't think we're going to go into a deep bear market. It's because we've got so many solutions that are going live in the coming weeks, and that should ease pressures on Ethereum, on the base layer of the Ethereum blockchain, which should reduce the amount of money or amount of ETH that it takes to transact on Ethereum. So we've got massive announcements coming up, or upgrades from Arbitrum. Optimism continues to onboard now new projects to their layer 2 solution. And then Immutable X going live. ZK Sync is coming up soon. And then there's another one that is escaping me as well at the moment. But yeah, Polygon Hermes is another. I think Boba Network is another one that's going live soon. I think Starknet was the one as well. So why does all of this matter to you? It should just help more people have a reason to use, well, in this case, Ethereum, and in my opinion, will just drive more innovation because there will be more activity in the space. And finally, I just want to re-emphasize the amount of capital coming into the space is as high as I've ever seen it, which again we did not have this last time in 2017 when the markets went crazy and there was a precipitous fall in market prices. We did not have this massive like treasure chest of venture capital kind of coming into the space, whereas this time it is different in my opinion because that venture capital is here and it is supporting the ecosystem and it is speeding up the innovation cycle, and the continued rapid improvement of all the supporting infrastructure in the space, as well as just the quality of the apps and protocols that are possible and live today. So yeah, people keep saying, will it go into a 90% bear market like we saw in 2018 and 19? In my opinion, I don't think we're going to have Bitcoin or ETH depreciate by 90%, like last time. I think this time it will be different. I still think it's definitely possible that Bitcoin and ETH could more than half in price, but I don't think it will be as drawn out and as painfully long as what 2018 and 19 were. I think it'll be a lot more condensed of a time frame in which that massive crash happens, and I wouldn't expect that crash to happen until maybe Q2. It would get started next year is my prediction, at least. But yeah, they're just some of my thoughts. In terms of other chains, I did just want to highlight that they continue to see really strong price outperformance against ETH. So that is something I've been predicting for the past few weeks, as you would have seen in my videos. Why have I been saying this? If you go back, it's the same reason really why I'm more bullish on these alternative chains tokens. So these Ethereum competitors, their native tokens such as Solana, Avalanche, Terra, Polkadot, Kusama, Secret Network. There's some other examples of them which I'm not as bullish on for different reasons. But those ones I continue to be bullish on. Phantom's another one. I would expect them to outperform ETH, as I've been saying for a couple of months now, just because of the ongoing issues with Ethereum's high transaction fees. But my overall inkling, and I tend to prefer Ethereum, and the ecosystem I think is still incredibly heaps more rich and vibrant than these other blockchains. That's why I'm heaps more confident on it over the medium and long term. But yeah, the amount of subsidies coming in from these other blockchains is just, in my opinion, way too hard for Ethereum to compete with in the short term. And that's why we have seen the likes of Avalanche, Solana and Terra and Polkadot. They've all hit all-time highs at different points in the past few weeks. Yes, Ethereum has also, or Ether. However, I guess just if you're talking about price growth and just in proportional and relative terms, I think the potential gains of these other tokens is more appealing to me as an investor, as opposed to the potential gains you'll get with ETH in the short term. But yeah, I think my opinion on that, I know, is going to change as we kind of get into March and April next year, because that's when I would expect to see a shift in the narrative around excitement around Ethereum, development, the progress in Ethereum's development, particularly for, what people are kind of calling Ethereum 2.0, which is essentially this merging of, or this kind of launching of the chain to, proof of stake. Well, the chain's technically been live for, about a year now, but I guess for the sake of this video, I'll just kind of keep it simple. But yeah, extremely excited with the state of the whole industry, and that is why I'm still confident that the markets are going to go another leg higher and going to go on another run up to all-time highs. So They're just my thoughts I wanted to leave you with at the end of this episode, but I will see you again next week, and I hope you all enjoy the rest of your week.